Good morning. Thank you for hanging out with me. I'm Anton Stetner, and I love real estate statistics. I love data. I love how things play together. And so today we're going to talk about the Seattle Metro. We're going to talk about the whole market. And what I want you to ask any questions you have. Okay, what are you seeing? What are you feeling? Type that into the chat. Also, if you can hear me, because this is live, someone say yes or give me a thumbs up, some type of emoji there in the chat, just so we know what's actually happening and that this is working. What we're going to do is, as usual, we're going to dig through all the data. But number one, what I want to do with you is I want to talk about where the market is first. So very simply, where the market is first is, hey, good morning, Dana. Is right now, last month, we saw rates go up. So the market actually slowed down just a little bit last month in April. And then what's happening right now? Good morning, Todd. What's happening right now is the Federal Reserve, they had their meeting last week. And in their meeting, they did two really specific things I want everyone to pay attention to. One, they did not change rates at all. Two, the thing that they hid from all of us, and we recorded a whole podcast episode about this specifically, but the thing that they hid from the general public was they changed the selling of their balance sheet. So they were selling off about $80 billion in treasuries every month. They lowered that to $25 billion. What that does to the overall economy and the overall market is that is increasing the liquidity that we are seeing in the market. That was the start of the easing of interest rates. So what I want you to know is that the Fed, in my opinion, has officially pivoted in their narrative. The Fed has started turning. They're most likely not going to raise rates anymore. And we've seen peak rates in this cycle, which means from here, for buyers, sellers, investors, it means that rates will slowly go down, not quickly, very slowly rates should go down. Rates like to shoot up like a rocket and then float down real slow over time, just like a parachute. So I expect rates to drift down from here, and I'm going to show you in the 10-year Treasury how you can track this too. So let's put that up real quick. Present. Share a screen. Share. Okay. And let's make that bigger. This right here is the 10-year Treasury. You can look at the 10-year Treasury to know, generally speaking, where 30-year fixed debt is. 30-year fixed debt on top of the 10-year Treasury, generally speaking, historically speaking, has been about 180 basis points or 1.8% higher. Because they know all of these loans are going to get refied or they have to make more money. So right now it's between 280 to 300 basis points, aka 2.8% to 3%. So what we saw that negative news and inflation data that wasn't working well at the end of April. Rates shot up through here, and then boom, this is Jerome Powell's speech, and then this is the new inflation data coming out. So the thing for you to understand is that right now, rates have peaked. You can see it right there on the screen when I showed you the 10-year Treasury, and that they should drift down from here. So that's item number one. Item number two is that inflation data came out slightly positive. We just recorded a podcast on that yesterday, so that'll be up here in the next few days. But it came out slightly better than expected. And so what happened is then interest rates went to below 7% yesterday. Where we're going to move into now that we've kind of set the stage for one, I believe rates have peaked. Two, I believe the Fed has pivoted. So what I want you to be thinking about is, because the Fed is done, as rates come down, what happens to buyer demand? Does buyer demand go up or down as rates come down? Anyone feel free to answer this in the chat. What happens is, as rates come down, more buyers qualify. And so the activity in our local market here in the Seattle Metro, expect it to increase, and for you to also have to fight with more investors. So let's go through the actual data together. Okay, so I wanted to look at the whole MLS. You are absolutely correct, Todd. That buyer demand goes up as those rates change. So think about this. If the 10-year is trending down, like, how many more buyers are going to come in? So this is the whole NWMLS. And right now we're looking at the average price for the entire MLS. And that represents a majority here of Washington State. What I want you to see, though, is if we just come over here to close transactions, most of Washington State is closing more transactions. And that the average price and the median price throughout most of the state is going up right now. Now let's go in. We're going to add King County and Snohomish County to this list. And then I have room for 2 more counties. If someone else wants me to throw on 2 more counties, I'm happy to do so. Okay, let's look at this together. So if anyone wants to see another county, just throw it in the chat and then I'll add it in real quick. I've got the data set to monthly. The thing that you have to understand is, if the data is smooth over 3 months, it changes. If smooth over 6 months, it changes. Smooth over 12 months, it massively changes. I like to look at it on monthly because I think it tells us a better story. So if we look at the median price, you can see the median price in King County is up to $874, or 11.4% over where it was last year. And in Snohomish County, it's $716,000, up 6.1%. Let's look at the average real quick. The average in King County, just look at this year, started at $957,000 and just shot straight up to $1,121,000. I can't believe that. What's also crazy is when I look at that number relative to the peak over here, when we peaked out in, I'm going to take myself off so the data gets bigger. When we peaked out over here, we were at 1.113. So King County has officially passed where we were in 2022 when the Fed started raising rates. Snohomish County, however, has not. So Snohomish County is at $848,000, and it is still at $775,000. Regardless, though, the median and the average are outpacing where they were. Now let's look at new inventory coming on the market. Once again, if you're just joining us, thank you. Throw any questions you have about the market into the chat. I will answer all of your questions. And then second, if you want me to throw on another county, or you want to look at a city specifically or a zip code, we can look at that right here at the end. Let's look at new listings. So new listings is definitely up approximately 33.8% and 36.5% over the same time last year. The reason I keep 3 years worth of data on is I always want to be showing you the seasonal trends. Okay, so you always see inventory the lowest right there in December, in winter, and then you see it climb all the way to June. So realize we're getting ready to head to peak inventory just like usual. Homes for sale. Homes for sale in King County, slightly up. In Snohomish County, slightly down. Super interesting. This is where the data I think gets really interesting, is that rates right now are not much lower than they were last year. And with rates being not much lower, you wouldn't expect the pending number to be this high, and you wouldn't expect the closings. What it means is the consumer has this thing, it's called recency biased. And that means like they can only remember really short time frames. So all of a sudden, this 7% mortgages, and when it dipped into the low or upper sixes, that was just normal for them. So understand that's what we're working with here. Also, the bidding wars are back and activity has been pretty high. So let's go back. Let's throw this back up on the screen. Boom. So once again, pendings are up. And when pendings are up, those will show up as closed transactions. Closed sales are up 15.2% and 15.4%. The interesting thing about the closed sales, though, that I want you to understand that I'm seeing in the data personally is that not all real estate brokers' businesses are up 15%. What I'm seeing is I'm seeing the 20% of the agents, you know, the 80-20 rule, just like the Pareto principle, the 20% is doing all the business or a vast majority of it. So their businesses are sometimes even beating this. If you're listening to this and you're a broker, let me know if your business is up even more this year or if it's down or flat. Love to hear what's happening specifically with you. Days on market. I don't like looking at the median. I like looking at the average. So if days on market is going down, now it naturally has this rise in the winter, you know, so ignore these big spikes. But right now it's trending down. If it's trending down, what does that mean to you? Like days on market going down, what do you hear? As a buyer, as an investor, as a broker, what you should be thinking about when you see days on market trending down like that is the market is increasing the demand and the velocity of the market, which could mean you are looking at bidding wars and less opportunities for you to be able to purchase something. Let's go into one of my favorite ones, months of supply, because months of supply starts to show us where the overall market is headed. Okay, so months of supply was definitely rising. You know, it rises naturally. You can see it kind of peaks out in September. Let's look at this over a 5-year run. See, months of supply rises till June, peaked out in July, August, peaked out in July, peaked out in September, peaked out in September, boom, rising right now. So months of supply always rises as we come into the spring market. Why? Let's be brutally honest. This is Washington State. And so as the weather gets nicer and as we stop getting decimated by the rain, the sun comes out. All of a sudden, everybody wants to buy more real estate. They want to list more real estate. So when do the best deals happen? The best deals almost always happen. And how do we know? Let's look at the percent of original list price. The best deals always happen in the winter. Okay? So let's look at the end of last year. At the end of last year, you see going into the winter that the percent of original list price is approximately 96.4 in King County and 97.2 in Snohomish County. The percent of original list price is a piece of data that says something very simple. If the property went on the market for $100,000, And in December, the percent of original list price was 96.4. It told you the average property sold for $96,400. Well, what's happening to the percent of original list price right now? You can see we started the year at approximately 97.4 for King and 97.6 for Snohomish. And now it's gone overboard. Now I've got to throw this all the way up. So when you see King and it says 100 point or 102%, you see a Snohomish County that's also at almost 102%. It means the average property is selling for 2% greater. That pretty much means when you see the average property selling for 2% greater, that almost the whole market is in a bidding war. If the market is telling you, hey, I'm in a bidding war, we're selling for above list price, and we know that interest rates are going down, and the Fed has told you, hey, I'm starting to pivot, do we expect demand to go up or down from here? We expect demand to simply increase as rates go down. Also, this came up in our investor mastermind last night. The thing I forgot, and one of the brilliant people in the audience brought up, was in an election year, rates also just generally trend down. So if I'm a buyer, if I'm a seller, if I'm an investor, this question is going to come up with rates right now. It's like, should I wait? And the answer is you shouldn't wait, because what we're showing you here in the Seattle Metro is we already have less supply than demand, number one. Number two, we're showing you that we are already over the list price on an average basis, which means as rates come down, that's just going to get worse. So if I'm an investor looking for a deal, I need to make some offers today. If I'm a buyer looking for a deal. If I'm a seller, the thing I need to be thinking about is what happens in an election year. In an election year, as the election starts to get close, fear goes up. It's not because Republican, Democrat, Independent. It's all about just that fear of the unknown. They don't know what's going to happen, so the market naturally slows down. So we should probably see some deal season also later this year. Let's dig back into the data. Once again, if you're hanging out with us, please feel free to drop a question into the comments, and then also put up there if you want me to look at a specific city or a specific zip code. Price per square foot is always a very interesting one. Of course, this is following the average price, but this just gives you a quick way to be able to do the math. If you're thinking about renovating something, if you're thinking about flipping something right there, it's pretty much reflective of exactly what we saw in the average price. Shows depending. Now, this is an interesting piece of data, and I think people naturally misinterpret this specific piece of data. They think when shows depending is going down, that the market may be losing steam. But we just looked at the percent of original list price. So what we know is we're seeing bidding wars. What this means is the buyer walks through the door, and then the buyer is instantly saying, I want to make an offer on this. That buyer is seeing less homes and making more offers quicker, is what this data is actually showing you. Todd, I see your question, sir. We will get to that. So when we look at this specifically, we can see shows depending is declining. In other words, another indicator that the market is picking up speed and velocity. Okay, so for Todd, we are going to go look at Everett. What is the market doing? And new construction. So we're going to slap Todd's question on there. We're going to go back to sharing the screen. Now let's go dig into Everett. If I could spell Everett correctly. There we go. The city of Everett. Boom. Let's go into sales price. So the city of Everett, the average sales price is showing up 9.2% versus last year. And the median price is showing up 13.2. Everett's looking good. What's interesting as we're looking at Everett here, you can see that the median peaked out at almost 700 grand. And the average peaked out at 708. So Everett is not back yet like King County was showing. That's a good data point for us to keep in mind. New listings. New listings in Everett is up 50% over the same time last year. Homes for sale is only up 10%. Okay. Pending sales up 52. So Everett's hot. Look at that. Look at that graph right there. If I was an investor who bought properties in Everett, maybe like I do, I would feel comfortable investing in Everett right now looking at this pending data. What it's showing you is that there is a lot of demand coming into Everett. Closed sales. Wow. Let's drop this to 3 years worth of data. Closed sales up 36%. So closed is up 36%, pending's up 52%. So Everett's still picking up speed. Let's go to supply. Holy low supply, Batman. Look at that. That's a technical term, by the way, Todd. Holy low supply, Batman. We got a month worth of inventory. This is freaking low supply. Let's go to percent of original list price. 101.6. So we saw that same thing, kind of the low in the end of the year. That's always natural. Because if you're a seller and you're staying on the market through the winter, let's be honest, you're motivated. Sellers don't stay on unless they're motivated. Price per square foot, $395, up 10%. Shows to pending, 17 down. So look, once again, picking up that velocity, 14 shows to pending. Now, let's grind into this a little bit deeper like Todd asked. I can come over here and select simply new construction data. Now, the problem with this data, and I knew this was already going to be like this, Todd. So one, I appreciate the question. And the thing to understand is there's not a ton of new construction in Everett. So without a ton of data, this data is going to just wildly go bam, 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 bam. It's going to bounce all over the place. Anyone else, feel free. Add into the chat the data that you want to look at, and we will look at it together. So let's come over here and look at sales price. Let's look at the average first. Okay. So obviously we had some expensive homes sell in July of last year, and obviously, okay. So down relative to the previous month, median down. Let's smooth this data out. See if it gives us a better look at what's happening. Nope, no better look. That's kind of giving us a better look. Yeah, as you can see, Everett definitely got hit a little bit harder. In 2022, when they started raising rates, Everett is still not recovered on its new construction side, both on the average and the median. Now Todd wants to know supply. What's available? Let's go look at the supply. I'm going to drop the data back to monthly. Let's go to the month supply of pending. It's sitting at about 1.4. Okay, let's smooth the data and see if we get a different result. Yeah, 1.2, 1.2. Yeah, still very low, which is pretty much reflective of the rest of Everett. Let's go into the percent of original list price. Oh, interesting. Todd, I didn't expect this. So when we look at this percent of original list price, you can see it pick up. In other words, so builders generally adjust to the market quicker, but they are actually, so they don't usually have these bidding wars where it goes over the list price because they're usually adjusting faster. Anyone else, if you want to look at another city or a zip code, let me know. Drop it into the chat. Any questions you have, drop it into the chat and we'll go over it. But the data is showing us it's at 102.8 in April, and it peaked out at 103.8 in March. That blows my mind. That was massive demand for the new construction here. I would say based on the supply, based on the original list to sales price ratio, and based on the increase in price, I feel very comfortable with new construction here in Everett right now, Todd. It appears to be an unbelievable amount of demand. It might be why we are buying properties in Everett. P.S. If you need a cash offer on something in Everett, we would love to purchase this. Let's look at shows to pending real quick, just to round this data out. Anyone else, let me know if there's something you want to take a peek at. Shows to pending, 7, 4, 11. Once again, very, very, very hot market there. Let's go back real quick and look at the whole NWMLS. Because when we look at the whole NWMLS, it just tells the story of what's happening throughout most of Washington State. So through most of Washington State, you can see average price is really increasing at the beginning of the year. Or excuse me, the median price, up 8.4% over last year. You can see that the average price is up 12%. You can see new listings are up 33.8. Homes for sale, once again, that trending up right there. Pending sales up. Closed sales up. Months of supply of pending up, but still pretty low. And remember, the NWMLS covers about 70% of Washington State. So this is the whole state we're looking at. Percent of original list price, boom, everyone's getting in a bidding war. Price per square foot, $415, up 9.8%. Shows to pending. So if you have any questions, drop it in the chat, but I want to leave you with a quick summary if anyone doesn't have any questions. The quick summary is, 1, we believe that the Fed has officially telegraphed to us that they're done raising rates, and they've started their pivoting by the sell-off of their balance sheet. 2, I would say the Seattle Metro is on fire, and that the closer you get to the median price or the average price in that area, the hotter it's going to get. 3, as rates come down, expect demand to increase and for you to be in more bidding wars and have to deal with more demand. So if I want a deal, I need to find that off market, or I've got to be willing to go look at it. Oh, a data point I forgot to mention earlier. One thing that is interesting is you are seeing a bifurcation of the market. A bifurcation is when two different things are happening. A majority of the market that is priced correctly is really selling within about a week. The other ones that aren't priced correctly are sitting on the market longer. So for one of our investors for a property in Lake Stevens, it had been on the market over 22 days. We were able to get over 30 grand off the list price, which brought it down to market value because the seller was finally motivated. So when we look at that right now as a buyer or an investor, and let's just say you were looking in Everett for conversation's sake, like Todd and I just talked about, you could open up Everett and then run your search as a buyer or a seller and then resort by days on market and realize those high days on market are probably motivated sellers that are now willing to accept a lower offer. Thank you, Todd. You're amazing, brother man. I always appreciate you. And Guy, my man, yeah, let's go look at that property. Let's see what kind of waterfront is doing out there in Tulalip. So first off, here's what we're going to do. I'll start sharing my screen. And we're just going to go back to the top of the NWMLS. And then we're going to log back in real quick. And we're going to go into one of these searches. And search, general. We're going to go into the map. 1002 43rd Street Northwest. Oh, it wants more data. Wonder if it'll get off of Marysville or Tulalip. Ah, it auto-corrected me. Okay. Oh, it's sharing the wrong tab. That's funny. Present. Share screen. There we go. Cool. Now we're officially sharing the right tab. Okay. So this last sold for $1,135,000 in 2020. Let's look through this picture so everyone else is getting onto the same page. Oh, when I bubble it, it doesn't come all the way up. That's super funny. Okay, stop the sharing of the screen, present, share screen. Share a window. Share the whole window. Boom. Okay, we've got the window now. There we go. So this beautiful waterfront home here in Tulalip, Washington. Guy, this is a beautiful home. This was a great home. Just so everyone's on the same page. And then the master upstairs just had this gorgeous view. Beautiful kitchen. Huge master. Beautiful views. Okay, so people know what this is. So right now, this is a 3,581 square foot home. It's waterfront. So this is the subject. Okay, we've got the subject sitting here. Let's duplicate this tab. And let's, now that we've, oh, it doesn't want to do that. Now that we know what the subject is, let's go back to the search. And let's just scroll out to see what else has been happening. Okay, so this one's down the block, but not waterfront. Ooh, Priest Point. Oh, look at that beautiful property. So this is no bank. So no bank is always worth more than a medium or a high bank, but this is a very small property. Cute, super cute. Okay, so that's on the market 69 days. 1,200 square feet. Let's scroll further out. One thing that we're also seeing right now, Guy, that's going to make this really hard to comp is the fact that a lot of these upper end properties, especially things that are waterfront like this, people don't necessarily want to sell them right now. So the only people who are selling these properties, specifically a waterfront property, are have-to sellers. There's been some life event that's happened. So I actually think we're not going to get good data on this specifically today, but we are going to keep digging real quick. See if we got any waterfront over here in Tulalip Shores. Nope. Yeah, there's almost none. Let's double check our criteria. Yeah, we got our solds up there. Let's add more days on market to the solds to see if that'll get us some better data. Okay, that got us this one. Yeah, no bank, 1,000 square feet, 1.1. Let's go to Tulare. Nothing out on Tulare. Nothing in Sunny Shores. So this is the problem. There's very little data. Got this other one for $1 million. Well, let's do this then. Let's go and see what the robots will tell us about this one. So we have access to realist data in the background, which gives us a lot of information. And the realist data says the value range today is basically in that 1.1 to 1.3. You know what? I kind of find that a little bit hard to believe, to be honest. I think you would get, I feel like 135 is actually the number on this. I think realist is slightly wrong. They do give you a confidence score of 83, which is pretty high. But when it comes to data like this, places like these models, they do really well in neighborhoods. As we start to get into any type of niche properties, it becomes even harder. Anyone else, do you have any other data or anything that you'd like us to look at? Any questions I can help you with today before we sign off? Speak now or forever hold your peace. Thank you for hanging out with me. Thank you for watching. Please like, subscribe, comment, and then send me your questions. All of you know I love talking about real estate data, and how the market works. Let's figure it out together.